Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at AlgoBot, and in today's session we're studying an expert advisor called Volume Surge Trend Pullback. This is a trend-following, pullback continuation approach that leans on moving averages, a reading of momentum, and a genuine surge in trading volume before it acts. Over the next few minutes, you'll learn how it defines a trend, how it waits patiently for a pullback, and how it manages risk once a position is open. Everything here is for educational purposes only. Let's dive in. Volume Surge Trend Pullback is designed to do one thing carefully rather than many things loosely. It is a continuation system, which means it does not try to pick tops or bottoms. Instead, it first establishes that a market is trending, and then it looks to join that trend after a temporary pause. The approach can be applied to any liquid instrument that MetaTrader 5 supports, from major foreign exchange pairs like euro against the US dollar to indices and metals, on whatever time frame you attach it to. For indicators work together here. Two exponential moving averages, a faster one and a slower one, define the trend. The strategy considers a market to be in an uptrend when the fast average sits above the slow average, and the slow average itself is rising. A relative strength index acts purely as a sanity filter, holding the strategy back when price is already stretched. An average true range measures volatility, and that measurement drives every stop and target so that risk adapts to current conditions. Finally, and most importantly for this particular design, the strategy tracks trading volume across a rolling window of recent bars. The volume element is what gives the strategy its name. A simple pullback system will often enter on any candle that reclaims a moving average, and many of those reclaims turn out to be weak and short-lived. By requiring that the entry candle also shows a genuine surge in participation, the strategy aims to filter out the quiet, low-conviction moves and focus on the ones where more traders are actually stepping in. Because all of its logic reads only fully closed bars, the strategy does not repaint or shift its signals after the fact. It also holds only a single position at a time, which is a straightforward form of exposure control. This makes it most relevant for patient, trend-following students who value confirmation over frequency and who want to understand how several conditions can be stacked together before a position is opened. Let's walk through the exact logic step by step. Everything begins on a new closed bar, so the strategy never reacts to a candle that is still forming. The first check is the trend filter. For a long setup, the fast exponential moving average must be above the slow one, and the slow average must be higher than it was a set number of bars ago, confirming that the slope is pointing upward. For a short setup, the mirror image applies. The fast average sits below the slow one, and the slow average is declining. If the market is not clearly trending in either direction, nothing else matters, and the strategy simply waits. Once a trend is in place, the strategy watches for a pullback and reclaim. For a long, the previous candle must have closed below the fast-moving average, showing that price dipped into the trend, and then the current closed candle must finish back above that fast average, reclaiming it. This is the pause and resume behavior the system is built around. Reclaiming the average alone is not enough. The strategy then demands two separate confirmations. The first is a momentum candle. For a long, the current candle must close higher than it opened and must close above the previous candle's high, showing that price broke prior structure with intent. The second confirmation is the volume surge. The strategy averages the volume of the bars just before the signal candle, and the signal candle's own volume must exceed that average multiplied by a set factor, which defaults to 1.5. Only when the reclaim, the momentum candle, and the volume surge all line up and the relative strength index is not already overstretched, does a long signal appear. The short side works the same way in reverse. Risk management is entirely volatility-based. When a position opens, the stop is placed a multiple of the average true range away from entry, and the take-profit target is set at a chosen reward-to-risk multiple of that same distance, defaulting to 2-to-1. While the trade is live, an average true range chandelier trailing stop ratchets the stop in the direction of profit, but never backward. A maximum hold timer closes trades that stagnate beyond a set number of bars, and because only one position is allowed at a time, exposure stays contained. Let's read through the code as it appears in MetaEditor. At the top are the input parameters you can adjust. EmaFast and EmaSlow set the two moving average periods that define the trend, defaulting to 20 and 50. Slow pullback controls how far back the slow average is compared to confirm its slope. RSI period, ATR period, and vol period set the lengths of the momentum, volatility, and volume calculations. VolMultiplier, defaulting to 1.5, is the surge factor that volume must exceed. AtrSlMult sizes the stop. RewardRisk sets the target at 2 to 1. AtrSlMult governs the trailing stop. Max hold bars caps how long a trade may stay open, and lots is the fixed position size. Below the inputs are the two signal lines. Notice how long signal is only true when every condition is met together. An uptrend, a reclaim of the fast average, a bullish momentum candle, a volume surge, and a relative strength index reading that is not already too high. The short signal line is the exact mirror, requiring a downtrend and the bearish versions of each condition. If the long condition is met, the code calls open trade for the buy side. Otherwise, if the short condition is met, it calls open trade for the sell side. Inside the buy branch, the entry uses the ask price. The stop is placed 1 risk unit below entry, and the take profit is set 1 risk unit times the reward multiple above entry, before the order is sent with trade.buy. The sell branch reverses this. The entry uses the bid price, the stop sits above entry, and the target is placed the reward multiple below. In both cases, the same volatility-derived risk distance drives the stop and the target, keeping the two sides perfectly symmetrical. Let's walk through this illustration candle by candle, starting with a long example on the left. Notice the two moving averages drawn over the price. The blue line is the fast exponential moving average, and the gray line is the slow one. In these opening candles, the fast line sits above the slow line, and the slow line is gently rising. That is the trend filter for a long being satisfied. The strategy now considers this market to be in an uptrend and will only look for buy setups. Watch the third candle. Price pulls back, and this candle closes below the fast-moving average, dipping into the trend. Look down at the volume subpanel underneath the price. During this quiet pullback, the volume bars stay low, while beneath the average line and far below the gold surge threshold. This is exactly the kind of low-conviction pause the strategy wants to wait through rather than chase. Now the fourth candle is the interesting one, and it carries our buy entry marker. 3 things happen at once here. First, this candle closes back above the fast-moving average, reclaiming it after the dip. Second, it is a strong bullish candle that closes above the previous candle's high, breaking prior structure. And third, look again at the volume panel. This bar's volume spikes above the gold surge threshold, which is set at 1.5 times the recent average. All conditions align, so the buy entry marker prints. The stop-loss marker sits just below, a volatility-based distance under the entry, while the take-profit target is placed further above at the 2-to-1 reward-to-risk multiple. From there, price extends higher across the next candles as the trend resumes, and the move reaches the take-profit target near the 7th candle. That completes the long example. A trend, a quiet pullback, and then a reclaim confirmed by both momentum and a surge in participation. Now watch the market roll over. After the peak, price declines sharply, and the fast blue line crosses below the slow gray line, which itself begins to slope downward. The trend filter has now flipped. The strategy considers this a downtrend and will only look for sell setups. Around the 10th and 11th candles, price rallies back up toward the fast-moving average, a counter-trend bounce. Notice the volume during this rally stays subdued, below the surge threshold, marking it as a weak, low-conviction move. Then the 12th candle carries our sell entry marker. Here price closes back below the fast average. It is a strong bearish candle that closes beneath the previous candle's low, and crucially the volume bar spikes above the surge threshold once more. The sell entry prints, with the stop-loss marker just above and the take-profit target set below at the same 2-to-1 multiple. Price then slides lower into the final candles and reaches that downside target. Both examples show the same disciplined recipe applied in each direction. That brings us to the end of our look at Volume Surge Trend Pullback. We covered how it defines a trend with two moving averages, how it waits for a pullback that reclaims the fast average, and how it demands both a momentum candle and a real surge in volume before acting. We also walked through its volatility-based stop, its reward-to-risk target, the trailing stop, and the time-based exit. Remember that this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. All trading involves risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.